What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner, and on this show, we talk about Bitcoin and macro and all that stuff. This is the longest running macro podcast in Bitcoin. And hey, we have fun live streaming here. I'm live streaming to YouTube, Telegram, Twitter, and Twitch. So there's lots of T's there. Telegram, Twitter, and Twitch now, all live, going out. Bitcoinandmarkets.com is where you guys want to go to stay up on all of my content. Let me bring that up. So here, what you're looking at, bitcoinandmarkets.com. You can sign up to be get free email notifications every time I put content out. This morning, I did put out 2 posts. One was the Market Pro newsletter. We looked at Bitcoin, a quick look at Bitcoin, stocks. Is Bitcoin decoupling from stocks, and what should we expect on that in the future? We looked at commodities. I ran down all the commodities that I could think of, like major commodities, including agricultural commodities and all that stuff, and said, hey, what can we learn from looking at all these commodities? What's the story that they're telling us? Then finally looked at currencies, mainly focusing on the dollar, because nothing is all that exciting right now in the currencies, on the currency side, which should tell us something during a banking crisis, by the way. So that's a little heads up on that one. Also, I do post the FedWatch post on bitcoinandmarkets.com with all the associated slides. So if you guys do watch FedWatch, which I recommend watching that on Thursdays at 12:30 Eastern time, I go live there with Bitcoin Magazine on their Rumble, YouTube, Facebook, Twitch, everywhere that they go out. And so I have a bunch of slides. Like yesterday, I probably had over 20 slides. And then what I do is I take those charts and whatever and put them in a post on my website to make sure that they get published in a timely manner. And then usually the day after the live stream, it comes out in the podcast version in all the podcast apps as part of Bitcoin Magazine's feed. We used to have our own feed for FedWatch, but then Bitcoin Magazine consolidated all of their podcasts. They kind of slimmed and streamlined down their podcast offerings and put them all onto one feed. So that's where you can find the FedWatch podcast version is on the Bitcoin Magazine feed. But anyway, and then I put out my own podcast version of these live streams that you'll get notified of as well. And those usually cut out a bunch of my misspeaks, my ums, my ands, try to slim it down. Sometimes I cut out half of the pod, or half of the live stream, and that makes it, consolidates it and makes it easier, faster listening for people. But try to find a Bitcoin and Markets in any of your podcast apps, and make sure you're subscribed and give me a listen every once in a while. Even if you do listen to these live streams, that helps the show just listening to those. So anyway, let's take a quick gander at, did I say what we're going to talk about today? Jeez, I don't even know if I did. So we're going to take a look at the skull of Satoshi that has been making its rounds. I guess Greenpeace or something put out a hit piece on Bitcoin, or a hit video on Bitcoin. So we're going to take a look at that, watch it. I haven't watched it yet, so this will be my initial reaction to watching this. But some people like this skull of Satoshi, and they're starting to run with it and adopt it. Bitcoin has this type of behavior in its past, when the meme of, or I guess it was meant to be a derogatory term of Bitcoin maximalism, was coined by Vitalik Buterin. Bitcoiners adopted that, reappropriated the term Bitcoin maximalist as a term of endearment instead of a pejorative. So, and it meant to Bitcoiners that, you're a Bitcoin maximalist once you understand the arguments. If you have been here long enough, you've lived through a cycle, you learned the technology, the social aspects about money, all these things, you come to the conclusion, almost inevitably, everybody comes to the conclusion, unless you have an ulterior motive, like you're a scammer. You come to the conclusion that Bitcoin is the real thing here in this space, and is the only thing in this space. And that's why Bitcoin maximalists adopted the term from Vitalik that was initially supposed to poison the well against Bitcoin. Be able to label us toxic, be able to say Bitcoin, group us into an identity and be able to attack that identity. But Bitcoiners successfully flipped the script on that. It wasn't until a couple years later they started using the term maxi, because that is not, I don't think any Chad Bitcoiner would call themselves a maxi by choice. So that was a term that was so kind of disturbing, uncomfortable, that people wouldn't reappropriate that one. And that was pretty successful, actually, to rename that maxi. Anyways, now this skull of Satoshi has come out, and Bitcoiners are instantly trying to reappropriate it to being a positive, which I think is hilarious. We're going to watch that video. Then also we're going to talk about an emergency meeting by Janet Yellen and some Deutsche Bank problems, that the contagion continues to spread. So all sorts of good stuff coming up today. Let's take a quick gander at the charts, or at the chart, the Bitcoin chart. Follow my content. If you're on the Telegram, you're very familiar with this chart. We're running up against this kind of resistance zone of between 28 and 30,000. The next zone after this, though, if we do successfully hold 25,000 and then break up through 30,000, the next resistance zone, or the next kind of target area that I have, is 48 to 50. So that is a big, hefty jump. And if you're on my Market Pro, then you've seen the charts, you've seen my rationale for this. And yeah, so that's what I'm still thinking on price. If we consolidate down to 25,000, it's still not a big deal. But if we do break 25,000, I think that's when we have to start reevaluating what we're seeing in the charts. Okay, let's take a quick look at stocks too. Like I said, I did put out the Market Pro this green on the day, which is interesting. And also, if you go to the weekly chart, we're green the last 2 weeks. What happened last week? Last week was the huge banking crisis, Signature, Credit Suisse, all of these things. And what happened? The stock market bounced and was pretty nicely green. Let's see, what did we have last week? It was up almost 1.5% last week. This week, it is up almost 1%. And that is with all this contagion going on. So I think that's very interesting. You would expect, again, from the headlines, you would expect this to be crashing. And it's not a secret what's going on. It's not like it takes a long time for the market to price in these things, okay? Because just look at what happened to Deutsche Bank stock this morning. It crashed instantly. The market is pricing in these things very, very quickly. And so if the overall US stock market is higher, that tells you something. Plus, stock markets are forward looking. They're not backward looking. They're not even, they don't even care too much about current, conditions, except they do tell you about current conditions, but they don't really react all that much to current news, because that current news should be priced in to a high degree, unless it is a big, big surprise, which does occur sometimes. So anyway, that is the charts. Let's take a look at the dollar. Go back to the daily, and we are seeing a slight bounce here. Dollar is still strong, even though people see this chart. Like if I just and I'm not sharing these to Telegram guys. I'm sorry about that. I'll fix that here in a second. But if you just look at this chart going back about a year or even 6 months here on the dollar, man, the dollar looks weak, right? The dollar looks very weak. But if you zoom way out and you get 2021 through today, the dollar looks very strong, and it's bouncing on some important levels. Like it's bouncing on the COVID high. It's still above 100, and like I said, it's bouncing today. So, this is not. But at the same time, in a banking crisis, a solvency crisis, you would expect the dollar to rally much harder than it is right now. So the dollar is not, even though it is holding at higher levels, it is not showing an imminent solvency crisis. And we talked about this on FedWatch, right? What we're seeing right now is a liquidity depository crisis, not a solvency crisis. Okay. That's all for the charts. And Telegram, guys, what I'll do is after this, I'll post these into Telegram. But I'm sure you've seen all of them because I do post them regularly. Okay, let's go to this tab and rewind this. This is from Greenpeace, commissioned an artwork to encourage Bitcoin to leave proof of work. Oh boy, this. Oh my God, it's just crazy, people. How they don't understand, and they're just providing, ammunition for Bitcoiners here. It's beautiful. It really is beautiful. It's hard to attack nature. Like, I'm going to put out this great video on why the Earth should reverse gravity. It just lends itself to parody, and it lends itself to being turned around on the people that are making the argument. So that's how I view these type of attacks on Bitcoin. But it also reminds me of the presidential economic report that they just came out with that attacked Bitcoin. And in there it said, oh, Ethereum has switched to proof of stake, but no word yet if Bitcoin is going to, or no. Something implying that the Bitcoin company hasn't said that they're switching to proof of stake, and that's how these people think. So anyway, let's listen to this or watch this. Let me zoom in. Okay, and let me make sure live stream people are seeing this video. All right, let's play it.
Think Bitcoin's not bad for the environment? Think again. Introducing my newest collaboration with Greenpeace. I'm Benjamin von Wong, and I use art to raise awareness for issues like plastic pollution and climate change. 6 months ago, I was studying the impacts of climate change in Greenland, where I saw firsthand what the climate crisis looks like. Greenland's ice sheet is melting fast, and witnessing it with my own eyes was absolutely gut-wrenching.
I mean, of course, we've heard, if we would have listened to Al Gore, why would there be any, Greenland ice sheet? There shouldn't be any Greenland ice sheet anymore. And I've seen things in the intervening years here where Greenland's ice sheet is at a very large extent. Like it's growing. It has grown over the last decade or something like that. So no, these are, all of these climate arguments have been debunked so many times.
That's where I met Rolf from Greenpeace and learned about how fixing Bitcoin could help solve climate change. Here's Rolf.
Greenpeace is campaigning to change Bitcoin's code so it stops fueling the climate crisis and harming communities. Bitcoin's the world's most popular digital currency.
Okay, what did he say there? All right, let's go.
Rolf.
Greenpeace is campaigning to change Bitcoin's code so it stops fueling the climate crisis and harming communities.
Okay, fueling the climate crisis and harming communities. This is just absurd. This is absurd. Do people... I know there's people that take this serious, but I just don't understand those people. Okay, let's continue.
Bitcoin's the world's most popular digital currency, and right now it's using as much electricity as entire countries, and most of that's coming from polluting fossil fuels like coal and gas.
Most are coming from polluting fossil fuels like coal and gas. That is wrong. The Bitcoin Mining Council, which like them or hate them, love them or hate them, they have put out research on this, that it's over 50%. I think it's like 60% renewables. Guys can correct me if I'm wrong on this. But it's over half are renewables. Also, like in the case of the New York State moratorium on mining, when they said it had to be, was it 80%? I think it had to be like 80% renewable in order to get a mining license in the state of New York or be able to continue mining, where they were only 60%. So like, and that was the biggest industry, or the only industry that was that high on using renewable energy. Like all other industries used like 5% renewables, where Bitcoin mining in New York State used 60. But that wasn't good enough for the New York Senate and whatever. They had to have 80%. Don't they see what they're doing is they're actually harming renewables? Bitcoin is going to push forward renewables because, man, if you can find a way to mine Bitcoin cheaply, Bitcoiners will take it. Bitcoiners are the marginal consumer. So all they're doing by this is harming renewables. And that's why I say I don't get these people, because they're just so dumb. They're so dumb. They don't understand this. Okay, let's continue.
Bitcoin's climate damage got 125 times worse in just 5 years. But with the code change, we could cut the electricity needed to run Bitcoin by more than 99%.
Okay, it got 125 times worse in the last decade because it's grown so much, uses so much more energy. That should be a plus. Like what would you say if you said the incentives for renewable energy grew 125 times in the last decade because of Bitcoin? See, this depends on how you frame it, right? Like, it's a wonderful thing. Bitcoin mining using energy is a wonderful thing. It aligns incentives. Going to proof of stake, I mean, obviously it's impossible. It will never happen. So anyway, let's see what they got to say.
But how to make sure that people paid attention? Enter the Skull of Satoshi, a symbol I built connecting Bitcoin and environmental destruction. This 11-foot skull, made from hundreds of pieces of electronic waste, like the kind generated from Bitcoin mining, is months in the making. And hopefully, you get to see it in person soon.
Changing Bitcoin's code is going to take teamwork. We need everyone involved, from companies and government officials to crypto enthusiasts and climate activists. So
I would love to see this down in Miami. Man, I hope they bring it to Miami. Last year we had the Bitcoin bull, right? And this year would be awesome to have the Skull of Satoshi down in Miami.
Share this video and follow Greenpeace USA to join the movement to change Bitcoin's code.
Oh God, so silly, so silly. Okay, also Ryan Breen, he posted this one from Gladstein. He pointed out that those are nuclear evaporating towers on the top there. I think they're evaporating towers, right? And how awesome this looks. This looks awesome. It's like it's eating waste. It's like it's eating this modern soup, this modern waste, and turning it into energy, turning it into Bitcoin, stored energy. I mean, it's pretty freaking cool, I think. Let's see what people are saying down here. Let's see. Anybody saying anything good? Someone needs to orange pill him. I'm sure that David Bailey is already all over this. Oh, maybe they're bringing it down to Miami. Maybe they are. Oh, that'd be awesome. Hail the Bit Skull. Looks like the kind of thing you only get by putting a lot of work into it. It is pretty epic. Yes, it is. I'm going to commission a volcano version one. Oh, that would be cool. Like the El Salvador, Bitcoin bonds, volcano bonds, whatever they're called. That would be really neat too. This is the type of stuff that can really catch on. And it's not NFTs, right? Like NFTs are a joke. All those people with those NFTs in their avatars, those things are like horrible art. They're not really even cool art. This here, on the other hand, is real art, and it's real life, and it is going to inspire people. I think it's great. And this is what Bitcoin brings us. Okay, enough with this. The Skull of Satoshi, pretty cool. Let's jump into this headline that I saw this morning. Deutsche Bank. Okay, let me read this. Schultz, no reason to worry as Deutsche Bank bloodbath reignites global bank crisis fears. This was an update as of 9 this morning Eastern time. The jawboning has begun. Germany's Schultz. European banking oversight is robust and stable. Deutsche Bank is, quote unquote, very profitable. No reason to worry. ECB's Lagarde tells U.S. leaders Euro area banking sector strong. ECB fully equipped to provide liquidity to Euro area financial system if needed. Macron, who is under fire, right? There's some fiery riots happening in France right now. But Macron says European banks have solid fundamentals. That prompted a very brief pop in banking stocks. And then you can see, like, on this chart, just a couple hours where it rose and now it's selling off again. Oh, wait, they're highlighting this section. Let me bring this up. So yeah, that would be this morning. Deutsche Bank has been falling over the last few days, and then just in the last couple hours, it did pop a little bit, but it's already reversing. And I haven't brought that chart up, but interesting. Goldman Sachs traders said they think the pain in European banks is simply a function of market selling, leveraged, and opaque business models post Credit Suisse, with some discomfort on what may roll out of Q1 IB earnings following a spike in rates volume. There's also 7% of the loan book in CRE, of which 51% in the US. Total office exposure is 34%, which is the market's core area of concern. So could say the range for US office is euro 5.5 to 11 billion euros. But then there's this. Kramer called a bottom. Kramer says, your money is safe at Deutsche Bank. And we know that he is the world's best indication. Last night, amid the Fed's H41 report, we noted an unprecedented surge in foreign official repo, $60 billion, under the Fed's new FEMA repo facility. And FEMA, remember, that came out with COVID, and it's a foreign repo facility, which means that the offshore scramble for dollars was alive and well, and someone really needed access to USD. The assumption was that it was Credit Suisse or UBS showing up their shortfalls. But in the action of the last couple of days, others are worrying that there is more afoot in the EU banking system. And I would not be surprised by this. But this chart is pretty incredible. Foreign official repo agreements at the Fed. It's pretty much zero going back. I mean, we did have the little brief spike here around COVID. Actually, this is when it was instituted, right? The FEMA. And then boom, 60 billion overnight. That is an incredible amount, an incredible move. After a brief respite earlier in the week, European banking stocks are cratering once again, now at 3-month lows. Deutsche Bank stock has crashed to 5-month lows. Deutsche Bank CDS is soaring, the credit default swap. So this is like insurance on a default. And man, it is going crazy right here. Look at this spike above 200 in just the last few days. It looks like maybe last couple weeks, but man, this is looking really bad for Deutsche Bank. Now, I wanted to say something too about this is during Credit Suisse, what happened to the stock market? Like I said, showed a little bit earlier, the stock market actually rose. The U.S. stock market rose during Credit Suisse. So if we have another Deutsche Bank here, or another one with another one with Deutsche Bank, then maybe U.S. stocks will rise. And what explains this? Well, it's money fleeing to U.S. dollar-denominated assets and U.S. banks. Capitals fleeing out of Europe. And I was talking about this years ago when I'm saying that the dollar should strengthen, when everyone was saying hyperinflation, after COVID, they're saying hyperinflation is on the way. Same playbook, same exact mantra from the great financial crisis. And I'm saying, no, the dollar is going to strengthen. We should see capital flight out of Europe. Europe is done for. And then I didn't even see a war in Ukraine happening. But now with the war in Ukraine, I saw it leading up the weeks right before, obviously, but not back at the beginning of COVID or anything. That's when I was looking at the dollar. And now with the Russia thing kicking off, that Europe has just shot itself in both feet. It shot itself in both feet, or maybe in the leg and hit an artery. Okay. Europe is bleeding out, guys. This is not good. Where's that money going to go? Well, it can go into Bitcoin, of course. But the lion's share of it is going to go into US dollar denominated assets. So, okay, that's enough of that. Let's take a look at Yellen. Yellen convenes emergency financial stability meeting on Friday as banking crisis explodes. The quote at the beginning is, "Capital markets stop panicking when officials start panicking. Here comes the panic." Bloomberg just reported that Treasury Secretary Yellen, who was single-handedly responsible for stoking and restarting the banking crisis on Wednesday, which until that day was easing back, with her comments that nobody in charge was even talking about uniform deposit insurance, let alone working on one. And we talked about this on FedWatch, was that, Treasury big time flip-flopped here. They moved in and they bailed out all the deposits for Signature and Silicon Valley Bank. Then they said, we're going to insure all the big banks. Well, the little banks then petitioned saying, what the hell? It's like 3,000 little banks in the US said, what the hell? All of our deposits are leaving, going to the big banks because they get free insurance there. And, we're at risk now because all our deposits are leaving. So then the Treasury came out via Bloomberg and said that they're looking at covering all deposits, all $19 trillion worth of deposits in the United States. They can't do that, of course. The FDIC only has $125 billion. But they said they were looking at covering $19 trillion worth of deposits. Of course, then the European banks freaked out because they said, we don't have an FDIC. We don't have a centralized FDIC. What the hell, people? All our deposits are going to flee Europe and go to the US. So then the Treasury had to walk that back. And now Yellen is saying on Wednesday, she said, nobody in charge said anything about a uniform deposit insurance. So, it's just flip-flopping, wish-washy, crazy stuff from these people that are supposed to have these master plans. These are the people that have the master plan that we're all told is, expertly marching us into a CBDC, expertly marching us into ESG, expertly marching us everywhere. And no, of course, they're not. They're flying by the seat of their pants. All central planners think they are God. They think they are going to succeed. And it's just a matter of, setting the dials at the right place. That's what they think. But of course, they're wrong. They always, always, always fail. That's exactly what we're seeing. We're seeing flailing here by these people. The meeting will be closed to the public. The Treasury Department said in a statement, the Treasury didn't say what time of the meeting would begin. It wasn't immediately clear whether the council would issue a statement following the meeting. The step comes as regulators continue efforts to instill calm in financial markets and among depositors following the recent failures of two mid-sized lenders in the U.S. and the near collapse of banking giant Credit Suisse before its government-brokered takeover by rival UBS Group. So these were mid-sized lenders, but they were the second and third largest bankruptcies in U.S. history. So that's a pretty big deal, if you ask me. The Financial Stability Oversight Council members include the heads of the Federal Reserve, the FDIC, and several other regulatory agencies. It has little legal authority, but serves as a coordinating forum. Here's a list of the full members. So we have, let's see, the Fed, the Treasury Secretary, Comptroller of the Currency, Director of the Bureau of Consumer Financial Protection, Chairman of the SEC, FDIC, CFTC. So lots of the big ones here. Yesterday, we asked, what is the record for shortest interval between final rate hike and first rate cut? Well, I don't think they're going to cut rates here, but Powell, I don't know, Powell, he has the MO of flipping. He has the MO of pivoting. So it's possible. It's possible that they come out. I mean, if Deutsche Bank fails and it looks like some other giants are going to start failing, they might do something. But maybe it is the ECB that's actually going to flip. Why would the Fed do this if it's pretty much being contained to these globally important, systemically important banks in Europe versus in the US, right? So anyway, finally, one can't help but wonder if this is the final pre-financial crisis meeting in Yellen's lifetime, because she famously said there's going to be no new financial crises in our lifetime. So anyway, that is a developing story, pretty crazy. I saw another headline on Zero Hedge that I wanted to bring up, and this one was just a quote from Rick Santelli. I think isn't he on CNBC? He's, a financial press guy. And he said, it's a crisis built on a crisis we've never solved. How can anyone be shocked? And I want to go back in time to my interview with Danielle DiMartino Booth on FedWatch. This is probably 2 years ago now, during COVID, like in the heat of COVID. And I was saying, I was asking her if this coming crisis was a follow-on from the great financial crisis. And she said no. But it's turning out to be more and more like that, right? I've been saying we're going to return to a post-GFC normal. And that's because the GFC was a turning point. The GFC was the beginning of the end of this financial system, the current financial system. And it will go on until we replace it with some Bitcoin-based system. So right now, it's the end of the credit-based system, and we're going towards a Bitcoin-based system. And this will continue in the general thread or the general trend that we've had since the great financial crisis. Low growth, low inflation, because it's dominated by a credit collapse, a global credit collapse. And people think oh, QE, they're going to pump in all this stuff. I also saw another headline by Peter Schiff saying, oh, more bailouts are coming. And of course, what that implies is inflation is coming. Well, he said the exact same thing after the great financial crisis, and it never occurred. It only occurred after we shut down the global supply chains and we had a supply shock. Had nothing to do with inflation. This is a deflationary grind of a collapsing, slow motion collapse in the credit markets, in the credit system. Anyway, I thought that was an interesting headline because it made me think of that. All right, guys. Well, that's going to do it for today. Thanks for joining me. My name is Ansel Lindner. Check out bitcoinandmarkets.com. Hope you guys have a good weekend. Enjoy your weekend. Get out there spend time with friends and family. Get out in nature, in the sunshine, have some exercise outside. Then, play with your kids in the backyard or something. But anyway, thanks, guys, for joining me, and I'll check you on the next one. Bye.